Good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, November 14th. Michael Boutros with you on the horn. Eman, Michael, Peter, Pete, Pooja, great to see everyone in the room. I'm doing well, Eman. Thanks for asking. So things are pretty boring. We'll take a look around the horn real quick today, but there's not really much to get excited about. You might have gotten that sense yesterday from my update. Look, these periods of contraction in momentum and just overall moves happens. Obviously, we'll get this contraction, but a good time to kind of have all your levels mapped out and poised. So we'll take a look at all of them today. DXY, Euro, Dollar Yen, Gold, Dollar CAD, Dollar Swiss with interesting moves. Actually, it was a decent move this week considering the ranges. Kiwi Dollar. We'll circle back and hit Sterling and Aussie. So something has to give. Michael, I completely agree with you, man. Good morning to you, sir. Yeah, it makes me, I get paused during these times, and it's actually a good time, like I said, to map out all your levels, have everything poised, so that when the market eventually does trigger, we're all set to go. We know what we're looking for, we know where we're looking for it, and we know how to look into play. So just a word of encouragement. These things happen, and you get this dead market where all of a sudden you're looking at, you're waking up every morning looking for a setup. You look into the levels we've mapped out, and things are just doing this. It's very frustrating, but patience pays in this market, and we will get things will return. So let's just jump right in and look what we're kind of track what we're looking for into the end of the week. Let me get you our weekly charts here. So DXY, we'll go through right from the top down. You all know these charts really well, but it helps just, again, to keep in mind the broader picture for the DXY. Remember, the major resistance level that we talked about, if 97.87 cracked, was 98.84 into 98.70. Okay, we're talking about the low week reversal, or excuse me, the high week reversal close. Right over here, and the 618 retracement of the near-term decline just off of that high that we made in September. Huge region, nice pivot in price, okay, looking back all the way back to 2017, and a level that we'll be watching on the weekly basis, So that just goes to show you that even if the dollar gives us a little bit more upside, it wouldn't necessarily be invalidating anything. I also want to take into account and bring your attention to the fact that we're seeing momentum still in consolidation, this multi-year sort of contraction in broader momentum. It looked like it was breaking to the downside on that onset with the break that we saw in early October or mid-October. Again, we pulled right back last week, right back above 97.87. Here we are back above slope support, trigger support. Long story short, watch this. This is going to be a nice little tell. The culprit will be on a close basis outside of this consolidation, but the apex is like 2 weeks away. I mean, this thing can't, there's not much more room. Something's got to give, to go back to what Michael said. So keep an eye on this level. I also want to bring to your attention that this also marks now the largest single weekly advance since August. And here's what happened back then. We were traveling right into that multi-year slope resistance. The following week, we went right into parallel resistance from 2018 and failed, right? Not a causation, not a reason to take a trade by any means, but things to note, guys, to kind of give a little bit more evidence, more factors to suggest, well, even if we see some further dollar upside here, may not want to really chase it. So that's DXY in the weekly charts. Just some interesting stuff coming up as we close the week. Here's what it looks like on the daily. I don't like this slope anymore. It's the pitchfork that we were working with for a while there. Looked pretty decent on the breakout here, and even on the resistance at 98.40 early in the week. Like, what do we do with this here now? Well, I'm looking at this as objective as I can. 98.40 is still near-term resistance. It's still the level to beat on a daily close basis, which we still have not done. And if we do see that topside breach, 98.70, the 618, and then we're talking right about that high week reversal close, okay, 98.84. Nice region of resistance if we get up there. But it's all about whether this holds that right here or not right now. Ideal scenario, it kind of holds. Gives us at least a deeper pullback before one last stretch. But um, confidence level for me, at least on this one, is not very high. Here's what it looks like on the intraday. Okay. And here's what it looked like earlier in the week. It's been the same levels that we're talking about, 98.36 into 98.40 is going to be that 50% retracement. 98.36 is the objective weekly open, not, um, not a subjective thing, it's just basic fact. So here we are, we're just testing the weekly opening range highs, straddling this level. We could go back to the previous updates on this, guys, on the 10th, and it's still the same setup. Nothing's changed. Here's where we opened on Sunday. Here's what we're doing right now. So again, patience. I think, at this point, you have to allot a possibility for a topside spike near 98.70. Okay, at least for the upper parallel. It's been riding this region too big. If it pulls back the weekly opening range lows and now converge right on the median line, choke that up a little bit right near here. Okay, 98.13 or so. So that would be sort of your breakdown level, and an objective break of the weekly opening range would shift the focus down to a Thursday, Friday low. But again, I mean, you're sitting at the resistance, pressing this level all week. I feel like there's got to be a test here before. So that's what I'm thinking here on dollar. You don't really have anything as far as data is concerned. I think Powell's going to have some more comments today before the budget committee, but la-di-da, like what did he do yesterday, right? So keep your eye on these ranges. They're likely to break. Again, not ideal, but kind of like gunshot approach here. People have pistol to my head. I still think this thing would spike higher before turning lower, but at the end of the day, we're looking for resistance. We've been looking for resistance since the start of the week. Is that the extent of it? I don't know. If we break higher from here, that's your next level of interest. Questions, comments, concerns on DXY? All right, so obviously, no surprise, puts euro at support. Here's euro dollar. This one's been riding same sort of play. Again, I just want to bring your attention to the weekly charts real quick since we're closing out the week here at this last webinar. Here's same type of development, right? You're seeing the largest weekly single decline since back there in August. Turn from resistance. We went over all these levels earlier in the week. Here's the key support zone, 109.94, 109.77, guys, is the low week close, low week reversal close for the year. So very similar setup as DXY. Again, no surprise. Add to that we have the 144 parallel of the pitchfork, which did catch the high. So some symmetry there, converging on that level. Really key for me. Really key for me. So on the weekly charts, heading into the close of tomorrow, that's the level we have to hold. 109.76, 109.94 on a weekly close basis. Here's what it looks like on the daily chart. So the basic 618 of the advance is really what the focus is. 109.76, guys, again, being that low week close. I don't have it marked up here on the daily, but you get the picture. Also note that momentum is testing 40 today, as price is testing, yet again, 109.94. Still looking for exhaustion. It's the same trade for the last 3 days. If you're holding shorts, this is definitely something you want to be taking a little off the table. Bringing your stops down to break even or better, and I'm on the lookout for exhaustion. I don't want to necessarily be just pushing along at this point yet. And at the same respect, I don't want to necessarily be chasing anything short at all beyond this region. A gap, a close lower, sub 109.94. There's room to play, but it's still that 109.76 level I'd be mindful of. Okay, let me copy that. Make sure that's on the intraday. Let me add, there we go. Here's what the intraday chart looks like. And here's at the 120. Whoop. All right. Here's euro from last night. So we're here. The only thing I would amend to that chart from last night, guys, again, is that low we closed at 109.76. I have it on the weekly chart on the update, the previous update. Remember, if you don't see the weekly or the daily, you can always click on the previous update, guys, and it's always provided one click away for you. So we have it on the weekly here, but keep this in mind, okay? Ongoing divergence, obviously, this is a prime example of when we talk about divergence having no type of implications when it means as it pertains to time. Here's another divergence signal that's been going on all week. Price action, lower low, lower low, lower low, lower low, not confirmed in the oscillator. So the hallmark is there. The signal's just not there yet. I'd love to see sort of a washout, an exhaustion push. That 109.76 level coincides decent with like that one last pop in DXY, right, towards the 618. So there's that hesitance, right, where you want to see that last push, that last kick to get some sort of low to trade against. But at the same time, you can't sit here and short this or try to press this any lower from here. Like I said, if you're holding lows, sure, put a trailer on it, okay? Put a 30 pip trailing stop and see and let it play out. But we want to see this sort of give us something to trade against. That's all I'll say on that. Any questions on euro? Again, the GDP data that you got today was a little bit stronger than expected. So on the German front, you got a 1% clip versus 0.8 forecasted. On broader Eurozone, you got 1.2 versus 1.1. Didn't do much. 109.62, 63 is the monthly S1, weekly S1 on the euro. Right at 109.6 in the 60s. Sure. On a washout, I'll take it. I'll take it. I wouldn't want to see it spend much time down there, Pooja. I'll tell you that much. I would want to see that fizzle out, like on a spike maybe. What's tomorrow? I don't think there's any data even tomorrow to give us a blast. We got retail sales for the U.S. Expected to come in at 0.2%. Maybe something that does it, but yeah, I would want to see some sort of if we're gonna see that tested, Pooja, I'd want to see it to be very brief. Anything that deep, I think you're risking just a drop right to the low day close. That's like 109.30s. But it's interesting that they both match up there. It's interesting that they both match up there. Where does the 786 come in? 786 even comes in at 109.40. Any questions on gold? Euro. Still love it. Still love the formation. Look at this thing. It's ridiculously clean, right? It's just how do you play it from here? How do you play the turn? You need a little bit more conviction on some sort of reversal pattern. All right, so that's dollar yen sliding into support, still holding support, and we'd need to make some sort of turn here soon if this is going to make a rebound. Okay, dollar yen. So just I just threw this out there because I thought it'd be interesting for you guys. I know some of you really love dollar yen, despite the fact that I don't. So I'm mindful of that. And when I see something, I throw it out. I haven't written about dollar yen in quite some time. If you look back on the updates, I think prior to yesterday's update, the last dollar yen move or update here was early October. But we were starting off the month or the week rather earlier in the week, and it was coming off of a really critical area of resistance. And that zone was 109.36 into 109.68. I know I've talked to you guys about it in the webinar. Haven't really talked about it so much in the updates. It's defined by so much, okay? You have the high that you made on the outside weekly reversal back in July. You had a 618 retracement of the decline. This covers the entire yearly range, okay? So the 618 of the whole 2019 range so far in dollar yen, and just hires the objective yearly open. What's not to like about it? Breakout, schmakeout. Everyone's talking about, oh, there was a major breakout in dollar. True. but this was the first major level of resistance. So, I thought it was worth kind of pointing out as we were just starting off the week or deeper in the week to look for that possible turn lower in price. Here's what it looked like on the daily chart. Okay, here's what it looked like on the daily chart now. We're just off that 618 retracement. We had made a nice kind of failure on an inside candle to make a breakout of that 109.35 level. Again, the top side of that range was 109.76. So we noted, hey, if it's going to happen, this is kind of a good place to look for a turn lower. Initial support, just at 108.65, nothing fancy. And that's basically one of last week's swing lows, and it converges on this basic slope support off the yearly low. And it's not a, speculative slope either. 1 point, 2 point, 3 point confirms, 4 point even better. Here we are now. Now the break below 108.65, if it materializes, which we're kind of seeing a test of that here, gets you 108.30. And what's 108.30, guys? Just a basic 236. So dollar yen, it's best plays I ever have on dollar yen are the ones where I'm so humble and so meager. It's like, man, I'm looking for 236 retracement. Nothing fancy, nothing deep. Now, if it does happen, it's going to materialize a break of this trend line, which would be further evidence of a larger turn, but we don't want to get overzealous. This is dollar yen. It's known to screw as many people as possible. So here's what it looked like yesterday. And the turn, again, looked pretty decent. You had confluence support now at 108.64, just lower. Again, that, downslope support, upslope support. Look for a reaction there. 108.30 is your next target if you get it. I don't think we have the conviction that it's broken just yet, but it's trying. Here's what it looks like now. Okay, this is the 120. We're there like now. Okay, so if we head into the US trade session and this thing slides and breaks even lower, 108.30 on a rebound, okay, I've been trying to gauge how I want to assess that. We'd have to see what the low is. Best way I would do this is if we finally get some sort of exhaustion here and bounce, quick retracement, see where the 38.2 lines up on that slope, and that gives you reference. Let me just show you how it would look right now. Okay, something like that. I don't even need the 618 right now. And that's kind of where I'd be looking for some sort of resistance or some sort of exhaustion again on the dollar yen move. All things held constant, I want to see this thing break lower. I do. I just want to warn everyone that we're testing upslope support and downslope support right into the open of US trade. Okay, so if it's going to bounce, if it's going to make a rebound, this is where you look. But with the same respect, if this pivots lower, it should accelerate. It should accelerate, okay, because you're looking at a break of downslope support, typically the sharpest part of the decline, and just a basic break of upslope support that we were looking in the daily chart for that multi-touch, multi-week, multi-month slope. Looking for reaction in dollar yen. Okay, I'd still like say, look, that 38.2 has no merit right now. I just put that as sort of a reference for you guys because we don't know that this is a low. This means nothing. So let's just work right now with a 109 resistance right at that slope, and then a downside break from here. Again, you're looking at 108.30. Actually ended up being a decent move this week. Who knew? Getting to dollar yen now. Must be November. All right. Any questions here on this dollar yen move that we kind of just threw out there earlier in the week? Testing downslope support right now. All right, that's number 3. Let's segue into gold from last night's update, and then we'll jump right back into FX, just because I think gold is it's really critical here. How are you guys doing with that? I know I got my gold traders and my gold girls in the room today, my gold women. We've been talking about this level for a while. The rebound happened. The level was great. The reversal is now coming into the first area of resistance. So let's take this from the top-down approach again one more time to talk about how magnificent this trade really is and the levels that we're looking at. Eman says, yes, please. I'm with you there, Eman. I'm long at 1448. Well done. Pooja says, missed the long by 15 minutes. Ooh, it's okay. It's the start of something, I think, and it's at least the move is decent. Cut half at 1462, Eman. Yes, excellent. Well played. Well played. 1462 is the level, right? I don't blame you. Let's look at the stuff at the levels right now real quick. So here's what the gold weekly chart looks like. The whole focus of everything since September, and you all know who have been in here. Eman says, sorry to hear that, Pooja. I love the camaraderie. Since September, anyone who's been in SB, and if you've been in the webinars sparingly on daily effects, you know we've been talking about 1451, 1461 ever since this high. This was a major, major confluence resistance. We were looking at this zone. We scratched it once in September before a big, big rebound, attempted to make another continuation pattern and failed. Here we are again with a deeper drawdown in price. A weekly close below 1451 is needed to keep the downside bias in play. Now, I don't think we're out of the woods for gold, but I do think the rebound is what we were, aiming for all week long because this region was so critical and it's such a long-term level of significance. Now, if this, and I'm talking big term here, guys, just to draw a picture of where we are in gold holistically, if this rebound finds resistance along that slope, specifically along yearly resistance, maybe in a week or two near 1491, you still risk the washout down towards 1419. Okay, that's if this rally fails or where this rally fails. So right now what we're gauging is on this bump up. Where does this bump up fizzle out? Does it fizzle out near slope resistance? Does it fizzle out near basic trend line resistance? Or does it continue lower and give us the move towards 1419? So that's just kind of where I'm thinking on the broader term of things. Beautiful trade, magnificent. This was the first major level of support, and we're getting the reaction. Okay, so all I want to be mindful of here is that this is the weekly chart, right? We're looking for the weekly closes here tomorrow to sort of give us a tell. Daily looks like this. I've cleaned this up so I don't have too much, levels marked up on this as far as the upside here. I just wanted again to highlight 1451, 1461, same level we've been talking about. Again, since the highs, beautiful, right? And even if you take this and look at it on a closed basis, doesn't get much cleaner than that. Okay, so where does that put us now as far as this rebound? Well, it's all near term from here. Well, one thing I will say again is watch this descending slope, this obviously descending channel formation. I want to highlight that the monthly open is way up here. So as far as like invalidation levels are concerned, it's kind of far out. Here's what I'm looking at with the intraday. Okay, and here's what we were looking at early in the week. Well, this was from last night's update. What did we highlight last night? Guys, it's a weekly opening range pivoting not only the weekly open, but that 1460, 1461 level. That was our intraday level. Remember, the larger range on the daily and the weekly charts, and this is why we work with multi-time frame analysis. This is why, humbly, I work with multi-time frame analysis, because in my head, it gives me these openings, right? So we highlighted 1451, 1461 on the daily charts, on the weekly charts, big, big zone. You zoom in, okay, and you kind of do some more closer analysis on this, and you have a beautiful confluence region at 1460, 1462. It's the first level that we kind of looked at, and then 1451 is the bottom of that range. Here's how we reacted this week. So this looks like a break of the weekly opening range. Shift their focus to a Thursday, Friday high. It's Thursday, so we can't get too, we can't run with that bias too much, but the October open, 1472, is what I told you guys last night, okay? Converges on the upper parallel for this near-term slope. Look for reaction there. Look for a reaction there. If that breaks, I do think you get a larger play to the upside. I'd be looking for, yeah, I see, I hear you. I'll be looking for something like this. And this is why I didn't put it on. Look at the 38.2. It's at the same exact level at 1472 is the October open that we're looking at. So I thought just to keep the chart clean. And the 618 doesn't really converge on much slope. So we'd have to kind of reassess this to get more upside targets if we break 1472. But for me, I just want to see a pivot there. I want to see what goes down there. All right, Pooja. So or Eman, you're the one holding the long. That's sort of the level. Your next major target on the upside. Again, don't want to prompt you to bail on the trade or anything, but that's your first level on the upside where you want to see something happen. You want to see something happen, and if it pivots higher, like I said, 1490 comes up, but we'd have to see if there's any structure to that advance at that point. Maybe get some slope on the upside. Make sense? Eman says we'll keep an eye on 1472. Also, Pooja, nice trade, Eman. Good luck, says Pooja. Right on. Finally, right? Ugh, I feel like a broken record. Looking for a new low in gold. Looking for a new low in gold. Well, it's there. We got it. I can shut up now. I don't know if that's the low, but that's the new low that we were looking for. Um, let's see if this got any traction above 1472. Do you short it from that level at 1472 if we get it? Exhaustion there. Man, if we get an exhaustive trade there, I think there's a scalp on the downside. Like because of where everything is, right? So if we take a look, for example, yeah, it could be, Pooja says it could be a Head and Shoulders bottom two near term. Yeah, you could make that argument for sure. I see it. But what I wanted to say, man, is like if you get that spike in the dollar, right? That spike higher in the dollar, and then you get that move lower in the euro, you could kind of see a scenario where this moves higher here, fails, spikes lower for maybe even a tag of like 1460 again, and then rebounds. It's like a $10 move. So I'm thinking like it would be a counter trend if anything. I'm still favoring the larger recovery, but yeah, 1472, if you get a near-term failure there, it might be a near-term scalp. Not, it might be a near-term scalp. If you're holding anything, 1440s long, or anything like Eman is, no, you don't want to get too over anxious and try to short it. But 1472 right now is the immediate pivot I'm focused on. Eman says, like how I'm thinking. Fingers crossed, Michael. Right on, Eman. I mean, hey, it's been working so far, right? Nice trade. Nice trade. And nice levels. I mean, gold finally giving us some slope here is pretty decent. Just thinking of kicking it out with that. Let's just work with this right now. Okay, so no change on those levels. Going once, going twice. Any questions on gold? So that was last night's update. It's kind of like pulling teeth at night, guys, trying to get these updates on weeks like where things are really dead. So here's dollar CAD. Here's dollar CAD. Another one where it's just been a slow grinder. The last update we had on dollar CAD was right here on the 12th. Here's what it looked like. So longer term, to start off the week, for me, the focus was, hey, 33.52. That's cool. That's the 618 retracement of the decline off the highs from September. Maybe we get a kickback there. Let's look at the near-term charts. Well, the near-term charts had us right at confluence resistance there because you also had the median line for this slope that we've been following off of the October, November lows. So there was the reaction, got a decent play, pulled right back. Weekly open support on an objective basis, held once, held twice. Here we are. What the heck is this? What do you do with that? You know, it's the same trade as dollar index drifting near resistance. euro dollar drifting near support. Lo and behold, dollar yen was actually the best trade out of everything we've covered so far on the dollar crosses. But as far as how to trade this, 32.80 would be the way I'd be looking for it. As far as if it spikes higher on failure, that is an objective, nice 100% extension of the advance off the lows we made in October and the start of this month. So kind of a boom, boom, boom would give you 100 here. That's 132.82 on dollar CAD. It's not there yet. It's not there yet. Now you're getting the divergent signals again into these highs that we just made, but how do you? We have to remain prudent. Discipline is everything. Most of these trades, I'd actually just rather just get on and put a stop somewhere against one of those key thresholds and call it a day. But that's not how we trade. That's not, practicing good risk management. And we have there's no trigger here to put us in yet. So wait we must and wait we will. Near-term support, I mean, the ideal break would still be the weekly open. Okay, that kind of gives you a highlight at 32.20, 32.18. Slope, though, comes in just a bit earlier. Obviously, that's going to be a decay in time based on the gradient here. So like 32.30s later tonight, maybe 32.20s if it happens in US trade. So it's tough. But watch that slope objectively from a lateral range. It's the weekly open, 32.18. If we settle below that, that would be the reversal pattern break for me. As far as the upside is concerned, if it spikes, like I said, 32.81, 32.82, possible failure. Slope doesn't come in till higher, right? But that would be the zone of which, okay, there's got to be something that's going to give on this. This thing's just been ripping. It's just like, come on. We couldn't even get some kickback off of 618. Give me a break. Now, despite what you're seeing here in the chart, the only other thing I do want to highlight is that we actually haven't closed above 32.50 yet. We never did. Okay, we're kind of pivoting that range right now. Again, the 618 of the drop from September. So if today fails, for example, and we close below 32.50 again, like we did back here on the 12th, like we did back here yesterday on the 13th, if we do it a third time, that's another exhaustive signal, right? That's another exhaustive signal. So hey, looking for clarity on dollar CAD. Looking for clarity on dollar CAD. Oh, you do have some commentary later today, I think, from Polos, speaking in San Francisco Fed conference. Could be interesting. All right. Oh, what are you writing, man, here? Have a guest from FXCM asking me how I became so good. I said the truth and telling that it was the effect from Michael. Since I started following Michael, all my trading. Amen, I appreciate that so much. Cheers. I'm humbled. Just sharing the experience. Just sharing the experience. It's always been great to have you in the rooms. Thank you so much. All right, so dollar CAD Swissy. Has anyone been getting involved with this one? It's so we reformatted. We kind of rejiggered the levels. And we talked about this earlier in the week, specifically with the fact that it was I just wanted to take a stretch out. And you know what? Forget the slope, forget the pitch. It's just a simple consolidation. Here's what we broke it down to earlier in the week. So the larger consolidation looked like this. 100% extension gave you a target somewhere around 99.14. And we said, hey, let's look for a break there. Okay. If the break happened, you're right on point, 98.91. The bigger level of significance is the objective November open. That's 98.64. Guys, we were within striking distance of that last night. The trade came down to 98.70 almost before fizzling out. I still think you could get it. Okay, I still think you can get it. You want to trail the stop or bring it down at this point, but we've settled through all of these levels. We're just striking distance away from here. What you see here is just an amendment. This is the pitchfork that we were looking for, or this is the slope that we were looking for earlier in the week. And I want to show you how this panned out because it's been pretty wicked. This, okay, is what we were looking at right here. And the confluence 100% extension was right here, right? That broke. All we did was take that slope, parallel it off the bottom, and that's what converges here. This is how you create a pitchfork. And this is why I tell people don't, go nuts with like having to match up the reference of the high, low, high. It's great when the high, low, high matches the slope that we want. It's great when the low, high, low matches the slope we want. But the most important thing is always the gradient, the slope itself. So you can see this parallel, which all of this came off of these two reference points. It's that simple. It's that simple. You saw a bounce here, the break, you saw acceleration. Still want to keep it and look at it, see if it offers resistance, which it did, which it did, which it did. Here's the bottom parallel, extended off the next low, kind of almost equal as far as the distance are concerned, gives you again that November open at 98.64. So that's still the key zone of support for me. And it's also, guys, the objective and basic consolidation support, right? Look, one touch, two touch, speculative, three touch confirms. There's the fourth region, all converging on the objective monthly open. How nice. So trim your expectations on the downside. It was a great setup as far as from the earlier in the week, but from here, you kind of want to chill out. All right, we're at the bottom end of the zone, the bottom end of the consolidation zone. If you have anything on this, like northbound of 99.20 or even the 99 handle, break even or better, and leave a little on and see if you can get that 98.64 clip. It's another 20 pips to the downside. If not, I'd be looking for a reaction there. Oh, and by the way, if that breaks, the next key zone is 98.38, 98.43. It's not that far away. That's the 50% retracement. I wouldn't necessarily go nuts on the top end, but it's the objective yearly open where we opened 2019, 98.38. And that's the big pivot zone, essentially, that you would need to see break to validate, the consolidation is kind of done. You're looking for 98 at that point. All right. So for now, resistance, look for near-term resistance along that slope. Bearish inval, I would put at this point. That's a good question. I'd want to put it at this parallel here, but I always like to match up some sort of level of significance, lateral level of significance along that slope, but we don't have it. So, at this, for me, the retracement of whatever this ends up being, if the low comes in here, I'd be looking for the 38 to get the retracement, to get the near-term bearish inval. Or even the 50 on this one is kind of where I'd be looking. Let's call it 99.25. Again, tentative, right? Because I don't know that this is a low. I need to at least see the US markets open for me to make any type of assumption that this is a low. Now, if it does, that's the level we'd be looking at. If we sink into a new low, ideal, something like this, 99.20 level, that would be bearish inval. Not necessarily where I want it to bounce, but that's where what would change the objective right back to the upside again of the consolidation. For me, the whole focus right now is what happens down here if we get there. So interesting set on Swissy. I can't believe this one's kind of been under the radar, but it's been working out pretty well. Questions, comments, concerns on Swissy? No change to any of the main levels here on dollar Swiss from the update. Okay. Kiwi dollar. Here's what New Zealand's been doing. It's actually kind of the one that saw the biggest sized single day move this week. on RBNZ and all that. Here's what Kiwi looks like on the weekly charts. The focus range, the only thing that matters here heading to the close of the week that I would highlight to you guys is, again, that 63 handle, okay, into 64.36. The 136 pip range, give or take. The 2018 low close at 64.63, and the 618 and this year's low week close at 63.03, 63.13. Nice critical region. We made an outside weekly reversal off that resistance last week. We talked about that. And here we are. We're still trading within that weekly range. So on face value, okay, on a weekly range that big into the start of the month, that becomes your monthly opening range. So for all intents and purposes, the whole thing that matters right now is a break of that singular weekly range for guidance in Kiwi dollar, okay? Kiwi looks like this on the daily chart. And here's what it looked like earlier in the week. So the ideal scenario, again, as we noted, was a play into 63, 63.13 for a long. We never got that deep, okay? Here's the breakout, and what we test today ends up being what? That was the support we wanted to hit. We never got the support, but guess what? We're at resistance. What's there? The objective monthly open, that's 64.13. And then you got a basic 38.2 retracement of the entire drop from July, and that gives you like 64.24, that key topside region we just talked about. So not surprising to see some kickback here today, but what does this kickback materialize into? Here's what it looks like on the intraday chart. Oops. It's the 240. What do we have on there? We had the 240 on there. Okay. So as we noted, we were heading into the weekly open, or we were heading into RBNZ. We were talking about 63.47, 63.35 being bullish inval. We wanted to see this hold. Okay. The parallel for the upslope that we've been following off the lows from September, October. Really clean stuff, guys. You don't get it happen that often. We got the drawdown from here. It came right into slope support, and look at that. Definitely tested us and tested a break, but only by a couple pips. The slope held. Here's the ripperoo. Top side levels 63.90, 64.10 already taken out. Here's the pullback. This has got to hold. Okay, this has got to hold. Ideally, it holds slope. I don't even want it to get that low, to be honest with you. But we need to start finding support on this pullback at some point. All the levels got taken out though, so you have to be mindful of, all right, it's going to give us a little bit more of a kickback from here. Basic near-term retracement for the weekly range, excuse me, puts the 618 still at like 63.60. So even if it were to get that low, it wouldn't necessarily change the technical structure, but we're essentially looking for downside exhaustion in this zone. Okay, 63.60s, 63.70s. If there's still more upside on the play. If there's still more upside on the play. Okay, ultimately 64.24, 64.28, the same zone we just talked about on the daily and weekly charts. That's what needs to break to give us resumption. Okay, in such a scenario, again, you're looking for 64.50s and beyond. But for me, it's all about this pullback now. Let's see if we can settle some support ahead of 63.60. Pooja says, expecting continuation higher in Kiwi, levels to go long. So if it's going to hold, Pooja, these are the levels I want to see hold right now. Yeah, 63.60, 63.70. If it's going to continue higher, don't want to see price get any deeper than that in this zone right here. But what's the thing I want to say? I wouldn't necessarily say I'm looking for continuation per se off that yet, Pooja. Do you know what I mean? So for example, if it were to drop into here, it might be a decent long position, but that might fizzle out near the upper parallel here for another drawdown. And then it might get, I don't know. I play this swing by swing. right? So for me, the immediate focus, like right now, is on this pullback. Do we find support in this 10 pip zone, 15 pip zone, just above slope support? If we do find exhaustion there and we get into a long, great. We'll look at another, retracement, find the targets, but only within the confines of this slope. Once we clear 64.10, if we have a little on the table, then we're looking for a resumption. But for now, we're still holding within this slope. We're still holding within the near-term operative downtrend, right? So we're just playing within the confines of this consolidation here. Make sense? It says, okay, thanks, right on. All right, so that is Kiwi dollar. Questions on Kiwi? Not to mention, it could be a near-term five-wave pattern higher, Puja. So you might be in for a kind of rebound, bounce, new low, and then, whatever the continuation pattern is. Okay, Kiwi, number 7. Number 8, Sterling. It's been the most boring trade. If you like watching paint dry, this was probably like awesome for you. Uh, if not, you probably were a little suicidal after watching this for a couple of days. Look, there's nothing to look at here. I just wanted to highlight that even the near-term slope has been holding, but it just hasn't been any momentum. These really dead slopes, like, all right, cool. Yeah, that held. All right, cool. We're kind of sitting here. It's cool, but that's all it is, just to look at. At the end of the day, key support still going to be 2750s, yearly open, 100% extension from the decline off the highs. Near-term resistance, I'm still, I still got the lateral level at 29, essentially, 28.96. That's the 618. It's the opening range highs for the week. Look for the break, guys. Here's your weekly open. Of course, this is FXID C chart, so it's a little bit different sometimes on the opens. Well, it is different on the open, but like that's all that matters for me on Sterling. I'm tempted to remove the 100% extension just for the sake of clarity. Just don't even mind this. Don't operate off of this level. I know it's offering support right now, which is kind of stupid for me to say, but focus on this range, okay? Weekly open 2790, resistance 2896. Focus on a break of this range. A break below here is needed to mark continuation. If we clear the opening range highs, 2990, right back on tap. Right back on tap. Ideal scenario, washes out one more time to buy it. But with all that's going on here and just the lack of momentum, complete deadening of momentum, I'd pick and choose my battles with this one. Okay, last but not least on the session here, guys, Aussie. It's been a very interesting trade. Now today, the biggest loser on the session with a massive breakdown of downslope support. So one of those trades where we were even noting that if we were to get the break to watch, because if we break the downside, you're basically breaking downslope support. So this thing traveled into the 100% extension at 68 and change, took it out. Then 68.30 was the next level. We sat in there. And this is like the scenario, guys, I want to highlight with Euro. Euro is basically doing the same exact thing. You're sitting there testing downslope support into a key lateral level. Okay, here's Aussie, right? This is the reaction if you get the break of those types of confluence regions. And this is the ones I always try to point out to you. So here's the break, accelerated drop, 68's out, next level down to 67.70. That's the 618 retracement, the entire advance off the lows from October. So I think this opened up a little. I wasn't really looking for the break, to be honest with you, but here it is, right? Now, There's not much slope that we've ascertained just yet. I was looking at this earlier. If we were going to get the break, that converges on the 618 if you actually take the high that you made earlier in the month, okay? Or excuse me, this is into the close of October. So that gets you a level of confluence near 67, 68 again. Excuse me, 67.70 again, or just below. So something to take note of. As far as the levels here in Aussie, you remove that 50. That's the 618. Sir, that's going to be your new near-term bearish inval. That's the downside break in the event of an extended move lower. And that's gone. All right, so a quick update there. If you guys want to take a quick snapshot of this chart, I'll put it in tonight's update as well, as an update from these levels here, because we've now broken that 68, that 618 at the 68 handle. So basically, you're looking for a drop towards this region right here right now. That's your next area of support for the Aussie. Questions on Aussie dollar? All right, and that takes us through all of my setups for the week, guys. That's everything. We went through all 9 of them. So keep your eyes on these things into the close of the week. Pete, we could definitely take a look at crude real quick. And guys, I don't know, I was waiting for someone to ask about the SPX for the Pete's in the room. Both of you here today. I don't know where the third Pete is. Maybe he's off, but here's SPX. There's nothing really to update. Snooze fest, right? Snooze fest. The other thing I do want to say is I'm looking for some sort of outside reversal pattern on a daily close basis, because we've had a couple of instances where it was actually really close, but it didn't end up materializing. And I think that would be your first onset on a trade like this, because the slope, I don't know how fruitful or how aggressive I would play a downside break of this slope if we get it. It's only a 2-point touch. And while the upper parallel did seem like really super clean, I don't know. It's fighting an uptrend, man. So we need some more beyond that. So look, it's been sort of lateral here. Again, sort of a ideal scenario, an exhaustion spike play, then a break back lower below the parallel. Test of that parallel's resistance would be the best way for conviction reversal. But till that happens, there's not really much to say here on SPX. So that's just a quick look at that. Crude. Yeah, I know, right? A spike high in SPX and a spike low in gold to get me long. Wishful thinking, yeah. Hey, man, I'm with you on that one. Crude looks like this real quick. So I think, well, where's the last crude update we did here? Couldn't have been too long ago. Oh, right here. So here's the last crude update we made here on the 6th of the month. It's still the same exact parallel, or the same exact slope. You see that this is where we were here. Okay, we were constructive while it's still basically above this key support zone. Was 55.21 or change. That was 54.90. Before we made the new high, I guess. So here's the pullback held 58.60s. That's still the same target on the upside. Weekly opens changed, obviously. 56.06 was last week's open. You could see that held support, okay, on the pullback right here, and we're just ranging. It looks like it's a challenge of the weekly opening range with the break that we're making right here, but you didn't see much acceleration, and you're getting ongoing, divergence. So I would say on this one, be careful. The ideal play would have been early in the week when this held last week into the close, the weekly open. The ideal scenario was this convergence. I had it highlighted for a spike higher here, and then it kind of fails. This, I mean, there's just no structure to it, Pete. You know what I mean? There's not much to get excited about. I do like that this same exact slope that we've been watching for so many weeks still remains in play. It's certainly encouraging, but you're losing efficacy as far as like being near an extreme to actually try to trade this. Um, here's the daily chart. I'm gonna drop that 50 just for the sake of clarity here. You know, that would have been the sweet spot for me. Okay. And then the weekly chart for crude, Pete, while we're at it, um, it's still the same 618, but just to show you the longer term implications of slope coming off the 2018, 2019 highs in general, um, the gradient's been okay. That caught low, sailed through that 25%, or I guess is this the 38.2? 38.2 line, sailed through it both times when we broke, was support, was support, was support, was support, was support. Like that would be the level of resistance. It's also the high week close for obviously the September rally, which was a multi-month high. So the close of that session was right there at 58.45. Would be a nice spot. Would be a nice spot. It's just like, what the heck do you do with this momentum? So take that for what it's worth, Pete. I wish I had more conviction for you on that one, my friend, but that's it's a tough one. It's a tough one. Hey, thanks you. I appreciate that. You have a great weekend too. All right, well, if there are no other questions, guys, we'll go ahead and wrap things up here. Keep it light. You know what I mean? The markets will return, and when they do return, the sudden surge in volatility is likely to be something prompted by trade talks, tariff talks, whatever, impeachment talks. I mean, you could take your pick from the headlines of what you think is moving markets. We're going to be focused on what's happening in price. And until we get that surge in volatility, keep the powder dry. Okay. Positioning, keep it light, and be pretty meticulous with your entries. Iman says, thank you, Michael, for all your fruitful efforts. Have a wonderful weekend. Hey, you too, Iman, Pooja, Pete, Jay, Steve, Mike. Have a great weekend, guys. I'll see you on Monday for the free session on Daily Effects, and right back here Tuesdays and Thursdays. Best of luck trading, guys. Cheers.